Welcome to the Fieldman Roll-Up and Associates Municipal Market Update for the week of June 15th, 2020. On the first slide, we're showing the historical MMD and how it's changed over time. So the bar charts represent the range of interest rates that each one of those maturities has had. And so you can see we are near the bottom of that. We continue to be, just like almost every time I've done this presentation since April. But a few things I want to point out to you. The 1 year when I last spoke with you was at 0.11. Now it's at 0.2. The 5 year was at 0.38, and that hasn't changed. The 10 year was at 0.84, and now it's at 0.85. And then finally, the 30 year was at 1.65, and now it's at 1.61. So I had told you that we were seeing a steepening of the yield curve, which was taking it closer to a more traditional yield curve. We've lost that. We have now flattened out, whereas the low end has gone up, the middle stayed the same, and the long end has dropped. So that yield curve has flattened. And so investors are willing to lend money for long periods of time and not require much more yield to that when you compare it to historical standards. On slide 3, we're detailing the 10-year U.S. Treasury versus the 10-year MMD AAA. And the green line represents the Treasury, and the brown line represents the MMD of a similar term, 10 years. And what you'll probably notice is for a good portion of the time, the green line is above the red line. And that is because brown line. Then the brown line has municipal bonds, which oftentimes have federal and state tax exemption, where the green line only gets state exemption. So the states can't charge taxes on federal bonds. And so for the exact same credit, you would expect that investors would require a higher yield on the treasuries than they would a municipal bond. But when investors get concerned about things in the environment, one of the things that they like, even though it might have a similar rating, the federal government can always print money. A municipality cannot. And so you saw investors move into treasuries, driving their yields down, sell off municipals, which that spike in rates were going up. So we've already been through that and talked about that. What's new is how the 10-year treasury had an increase in yield to almost that of the municipal 10-year, but then it immediately shot back. Now, we haven't seen a large increase in inflows in the municipal bonds. So it's likely that investors were buying other things besides treasuries, but they weren't buying that much more municipal bonds. So they might have been trying to get into on the equity rally that we saw, or even some of the oil progress that we've made as far as prices going up. But then they quickly came right back in when you saw that yield drop down. So when they were feeling more friendly on risk, you saw the 10-year treasury yield rise. And then when they did get more concerned about risk, they came back into treasuries. This chart shows money flowing in or out of municipal bond funds. Green money flowing in, red money flowing out. We have seen a steady continuation of money flowing into the municipal bond funds, but it's not been anything dramatic. But that's a good thing. We have money flowing in, because I'm about to show you a slide where volume has picked up of selling bonds. So here, that red dotted line represents the 2018 weekly average. Brown line represents 2019, green line 2020. But what you're hopefully noticing is the bar charts are much higher. So they were as low, even lower than 8 billion a week. And now we just recently had a week of 16 billion. And next week looks like it's going to be a pretty heavy, or next week, that's this week, I should say, looks like it's pretty steady as well. So with that amount of supply coming on, it's really good that we still have money flowing into municipal bond funds. If we continue to have this type of supply and not have much more money flowing into municipal bond funds, you may see some upward pressure on interest rates. So that's once again, this is something I always tell you we have to monitor. We seem to have a good balance right now, but over time, we'll need to continue to monitor that. So on the next chart, what we're showing here is the MMD yields and how they've changed over time for the 5, 10, and 30 year. One thing that's new is that it's been relatively flat. You're seeing equities move around a whole lot. You're seeing oil move around a whole lot. But when it comes to municipal bond yields, you aren't seeing big movements like we were seeing a few months ago. So that consistency is good. One thing it's noticeable to us in the municipal bond business is that we have gotten to a point where rates get low, but there's really not that much room for them to go lower. Like when you got to the 1 year at 0.11, there wasn't that much more room for it to go lower. So that partly is why when there's, even though maybe some interest here, you're not seeing them dip below where we've seen the last few weeks. This chart shows what we call the forward calendar, and there's some really important things coming up. Core retail, building permits, crude inventories, jobless claims, home sales, durable goods, all things that would normally catch investors' attention and certainly be market moving. However, we have so much news going on right now. COVID-19 is on the forefront of everyone's mind. There's so many different economic analyses that are based on when things reopen, that these are important, but there's just so many other things that are also very important. So I know I told you that when I talked with you 2 weeks ago, but that still pertains true today. Once again, here are the fill and roll out municipal registered advisors that I encourage you to reach out to for any additional information. They all have different transactions that are in the market at different times. They can give some additional feedback. So there's their contact information. But before we adjourn, there's one other thing I want to point your attention to is on June 22nd, we are fortunate to have Bob Whalen, or I should say Robert Whalen, join us for our first other public finance conversation. We have talked a bit and to prepare for this, and I'm really excited to share it with all of you. But that will be posted on LinkedIn and YouTube on June 22nd. So thank you for joining us for the Municipal Market Update. I look forward to talking with you on July 6th.